Today we're going to talk about how to trade ranges and when to stay out, because with the holidays coming, there will definitely be a change in momentum and these ranges are going to happen. Let me ask you something and answer this honestly. How many times have you given back a green day? Seriously, because you kept trading when the market wasn't going anywhere. No trend, no follow through, just chop. Here's the part nobody tells you. Most traders don't blow accounts because they can't trade trends. They blow accounts because they refuse to accept range days. Today I'm going to show you how to know with certainty when the market is not trending. I'll even show you on some charts what it looks like. How professional traders extract money from ranges. I'll even show you on the charts. Or they just don't trade at all. And most desperate thing traders want to hear, but rarely accept, when staying out is actually the highest probability to trade. Okay, let's get into some of this. If you've ever thought, why is nothing working today? This video is for you. Let's talk about what range days feel like. You enter long, stopped out. You flip short, stopped out. You re-enter, chopped up again. And the worst part, your strategy worked yesterday. So you think, it must be me. I'm missing something. I just need one good trade. That belief is what drains accounts. Here's the truth traders are desperate to hear. The market is not obligated to trend every day. And when it doesn't, trend strategies become donation strategies. But don't worry, we're going to show you on some charts what that looks like when it's trending, because there are when it's chopping or when it's ranging, and there are two types. Let's define this clearly. A range is not randomness. A range is a two-sided business. It's where buyers push price up, sellers respond, sellers push price down, buyers respond. Liquidity is exchanged, not expanded. A non-trending market has three core characteristics. 1. Overlapping structure. Higher highs are immediately rejected. Lower lows fail to follow through. Price overlaps itself again and again. 2. Failed breakouts. Breaks above highs and instantly snap back. Breaks below lows that immediately reclaim. Third characteristic, mean reversion behavior. Price keeps returning to the same levels, not continuation, reversion. If price keeps coming back, it's not trending. Okay. Here's a dead simple test you can use every day. No indicators, no guesswork. Ask this question. If I enter right now, where is price most likely to go next? If the honest answer is back to where it came from, you're in a range. Now let me give you a 3-question filter. Okay, pretty simple. Question number 1. Are highs and lows being accepted or rejected? If every push is rejected, you're in a range. Question number 2. Are pullbacks shallow or deep? Deep pullbacks that erase progress, you're in a range. Question number 3. Is the session expanding or compressing? Compression equals balance. Balance equals you're in a range. If you answered on any of these, it was rejected, it was deep, it was compressed, do not try to trade trends, because there aren't any right there. The two types of range days. This is critical. I'm going to show you what they look like on the charts. Let's go over them. I'll draw them. I'll show you on the charts. Not all ranges are tradable. This is where most traders get hurt bad. Type 1, clean, respectful ranges. Clear highs, clear lows, price reacts consistently, time builds value. These can be traded selectively. Got to be selective. Type number 2, rotational chop. Account killers. No clean boundaries, wicks everywhere, fake structure. These are not trending environments. Here's what desperate traders want to hear. You are allowed to not trade these days. Professional traders don't force activity. They protect their capital. How professionals trade ranges, if they even do. If a pro trades a range, they do one thing. They trade the edges, not the middle. And I'm going to show you this. That means selling highs after confirmation, buying lows after confirmation, smaller targets, faster exits. We're going to show you all these, what it looks like, and then go to the charts and show you a real live example. No chasing, no breakouts, no hope. And here's the rule most traders ignore. If price is in the middle of the range, you have no edge. You do not trade. That one rule alone will save accounts. When staying out is the trade, this is the most important part of the video. There are days where the best execution is inactivity. If you see constant failed moves, no directional acceptance, emotional frustration building, that's your signal. The market is telling you, not today. Here's the desperate truth traders need to hear. You don't get paid for participation. You don't get paid for alignment. Staying out is not weakness, it's discipline. If you remember one thing from this video, remember this. Your job is not to trade the trend every day, or it's not even to trade every day. Your job is to recognize when trading is inappropriate. Okay? Range days are not failures, they're filters. And the traders who survive long term, they listen when the market says to stand down. Okay, let me show you some of these charts. The two types of ranges. We're going to draw them out, then we're going to look at them live. Okay, let us remember now those two types of ranges. First, we're going to cover the clean, respectful ranges that we do trade, that professionals do trade. Here's what they look like. With clear highs and lows, price reacts consistently. So what we're trying to do here is we're going to see price go up, it's going to come down. Price is going to go up, it's going to come down. Price is going to go up. Oh, it's breaking out, it's breaking out, it's breaking out. Well, we're not going to trade that yet. We're not going to trade that yet because we're going to wait. Okay, but let me get into that. I'm getting a little ahead of myself. Here's the range. We're going to box this thing up. See here where it's hitting the high at the same place almost. It's hitting the low at the same place almost. We don't just wait for it to go here. We need confirmation. We need to make sure that it's going down. We don't trade when it's in the middle. Some people think it's 50-50 that it's going to keep going. That's not always the case if you do the math. But what we're going to do is we're going to let it falsely break out. People are going to be like, yeah, it's going up, it's going up, it's going up. And we want that to happen because as soon as it comes back in the range, we're going to say, aha, it was a false breakout. Look at this confirmation candle. We're going to get to this on the live charts in just a bit. That type of course, that would be red. That type of confirmation, now we have almost a 70% chance. And look at that risk reward, man. Going up to here. But yet we get to make all of this all the way down, all the way down, all the way down. That's money right there. That's money. Same thing if it were the opposite direction. Same thing. We got this range here, and we don't trade it just because it hits this low right here. No, 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 no. We wait till it falsely breaks out. People are like, it's going down, it's going down. Because they faked them all out. And they sold off all people sold a bunch of positions to them that they bought up because they intend to take it to their price level. Very nicely for us. Because as soon as it starts to break in this channel, we love it. Or this range, we love it. Why? Because now, and I'll show you in just a bit, this signal candle right here says we got about a 70% chance that it's going all the way up. All the way up, all the way up. Money. Money. That's what we're looking for. Not just trading on the edge, not just the edge, but when it breaks out and comes back. That's what we want. We're not going to fall for the breakout. We're not going to fall for these. We need a confirmation candle, and we're going to see that confirmation candle right here. I'll show it to you, okay? Let's go ahead and look at these charts real quick. Check out these charts. Couldn't have asked for a better thing just yesterday, okay? So here's what we're looking at. We already boxed this up. Here's the range right here. Ping pong and back and forth. And what did I say? We don't just trade when it gets to this high right here. Let me go ahead and circle that. We don't just trade this doji right here because it almost hit the high. No, 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 no. Wait for the false breakout just like it did perfectly for us. False breakout. People are like, it's going up, it's going up. But look at this beautiful signal candle right here, guys. Look at that. Beautiful signal candle coming right back into the range. That risk reward is beautiful all the way down. all the way down. Could have said the same thing on the flip side. We don't just trade when it hits down below this part right here. No, 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 no. Look at this beautiful wick down to show that the buyers are still pushing the price back up. Get in right here, ride that all the way up to the top of that range. Beautiful, beautiful, beautiful. Same thing, it comes back down again, false breakout. Beautiful signal candle right here, ride that baby all the way up. Same thing up here. Look at this thing. Could have made some serious cash on this. Breaks through the range. People are thinking, oh, it's going up. It's breaking out, breaking out. Nope. Look at this beautiful signal candle, beautiful momentum candle right here. All the way down. All the way down. Beautiful trades, man. Beautiful, beautiful, beautiful. So remember now, range days aren't failures. They're filters. Okay? If this video saved you from even one bad day, like the video, subscribe, and comment range if this finally clicked for you. And I'll give you some more details exactly how to find these and flesh it out for you. And I'll see you in the next one.